Brought to you by IOCO, Africa's leading integrated technology services company.
Well, it's time for Tech Talk. Now, banks' traditional lending criteria metrics are up for a challenge. Global risk and information solutions provider TransUnion Africa has partnered with MTN to create a new type of credit score using mobile call records to make lending decisions. And joining us with more insight into this proposed alternative model is Business Day's Mudiwa Gavaza. Thank you so much for your time, Mudiwa. Now, firstly, just so that we're clear, is this a new model or is it just meant to supplement traditional credit scoring models?
The team from TransUnion says to us that they are not here to replace your traditional credit scoring system, but rather they are trying to find a way to include more people that are left out by traditional scoring systems. And they actually estimate that there are millions of South Africans that don't qualify for credit loans and those types of things because your traditional scoring systems don't accommodate, for certain factors. So there's been a rise over the last couple of years around something called alternative lending. And alternative lending is premised on we need to score you or make credit application decisions based on alternative sets of data to what your traditional players have been doing all this time.
So it is just an additional credit score tool, right?
Yep.
All right. So, of course, now they're saying that they want to use mobile call records to track people's financial patterns. How do my calls accurately capture my financial behavior? I don't know, Mudiwa. To me, it just it just sounds a little bit shaky.
Okay, cool. So as much as they're calling it, mobile call records and all of that stuff, it's a little bit more broad than that, right? It's more about what is your spending behavior on the network, right? So they actually even mentioned the fact that they were looking at people that are using a SIM card for more than 6 months and this type of thing, because in South Africa, famously in South Africa, there's about 60 million people in the country, but there's about 115 million SIM cards in the market, give or take, right? So lots of SIM cards in the market. And what tends to happen is, how do you measure usage? Right, so in many cases, people are looking at monthly active users, 90-day active users, all of that stuff. But in this particular case, they're looking at people that are spending time. This is your main phone number. What is your purchasing activity when it comes to airtime? How often are you recharging? All of this stuff, and all of that is able to then give them an indication of how well you'd be able to service a loan, if you were given, access to certain credit facilities.
And I'm even thinking that spending then also includes the advanced airtime.
All of that stuff, yes. So what they said is, in Africa, because you're looking at two organizations that operate in multiple African countries, they're looking at South Africa as the start and then trying to see how they can push this to the rest of the continent. And they've actually earmarked to say there's about 500 million people on the continent that are being excluded from accessing credit because they don't qualify and all of that stuff. So they said because of that, they then went and looked at different data sets and all of that stuff. And one of the best that they could find, and also wide-ranging and overlaps the best, is call records, because many people, we all have phones, and the way that a person handles their buying patterns and activities on their phone, right? As far as they were concerned, it's a good indication of, other spending and, buying behavior, beyond that.
Okay, Mudiwa, but now we use different platforms to make calls. It's not just airtime anymore. In fact, you could actually go the whole month without buying airtime. You just FaceTime people, you call them on WhatsApp, you can even video call them, audio call them on Instagram. Do they also go into that, or is it just the airtime? And I'm just wondering then, how accurate is this, considering that there's so many people with smartphones that you do use the other platforms with data, or do they also look at your spending on data?
So specifically, they were looking at activity with prepaid customers, because in many instances, your postpaid are people that are, doing a lot of what you're talking about.
And data packages,
data packages, they pay a bill once a month, and their bill is going to be far above what a prepaid customer is likely spending. And they probably have access to certain deals that come with phones and, all of this stuff. So they're looking specifically at prepaid, prepaid customers, because once again, even
which there are a lot of in Africa.
Exactly, right? And especially in a country like South Africa, you have so many people that are, South Africa is more a prepaid market than a postpaid market. Yes, postpaid is huge in terms of in terms of your revenue, but in terms of count, South Africa is predominantly a prepaid market. So they're looking at activity on specifically prepaid customers, because even if someone is doing all the things that you're talking about, a lot of it is being channeled through the mobile phone and the network.
I mean, listen, this sounds like a great tool to use, and of course, really just uncovering the realities of how South Africans spend their money and how they behave in terms of credit as well, when you look at the advanced airtime feature. I'm wondering then, because it seems very useful, but would it also help traditional banks, or is it just for your alternative lenders that you've mentioned that have come into the market to kind of serve the underserved?
So this is squarely focused on your traditional players. And anyone else who needs some type of credit scoring and all of that, because your likes of TransUnion are providing these types of services to your traditional players, right? So when we were talking to them yesterday, they actually said that they've been on this journey since 2018, where they, I'm trying to remember, I think they called their platform Credit Vision from 2018, where since then they started saying, to their clients, who are the banks and other lenders, to say, hey guys, perhaps we can rejig this thing and look at other types of data, and we will do that in providing, credit scores to you. So this is the latest iteration, of that. And then now they've said, okay, fine, there's this other data which, has largely sat untapped. What can we do with it to actually bring more people into, the
traditional banking pool? Okay. I'm just thinking this is going to be quite a fight for market share there. Let's look at MTN now. What does this offer for MTN, and actually drill into their specific role in this partnership?
So they are, obviously, they've got the mobile side of things. So to even test this out, create a pilot, proof of concept, etc., they used their own data, to actually see.
And they've got a lot of data.
And they've got a lot of data. And one of the things that they were able to do was to backdate. So they were basically using this new methodology that they've come up with, tested against your traditional scoring methods, and then they backdated, let's say, 5 years. And then they were actually able to say that, our method was actually more accurate, in these years and on, all of these cases. So they were literally matching up credit decisions that had already been made versus if someone had used their new method, and they backdated, and then now they're doing it almost on a forward basis. That's one. Two, if you're MTN, right? MTN is growing its financial services business, right? MTN Momo, which is their mobile money platform, that's a business that's currently valued at 90 billion rand. Right, it's a huge business, over 60 million, customers across the continent, and all of this, as far as I'm concerned, it's adding to their financial technology capability, But now they're making it available to the wider financial services industry because they're working with TransUnion here.
Yes.
But if they're really going to roll it out to the rest of Africa and really attack the 500 million, they've actually stated that they're likely going to be working with other mobile operators in Africa to try and, get their data so that they can move into, such markets. And TransUnion themselves have said that they are definitely going to be working with other mobile operators outside of, MTN. But the MTN tie-up actually gives them a good foothold because TransUnion is in 8 countries, MTN is in 16 countries. So if you're looking to get into all 54 countries that Africa has,
yes,
right? That's a good base. Let's go into the countries where we have commonality first. That's there, and then we get into the 16 that MTN has, and then expand, out from there. So strategically,
yes,
that's the value that MTN is seeing here.
Okay, this is very, very interesting. And I'm sure obviously because they've been working on this for a while, I guess the traditional banks are also have appetite to use this tool.
Yeah. So from the indication that they were giving us, they did say that there is that indication from your traditional banks, and they've actually been in a lot of engagements with the National Credit Regulator, because as much as they're doing this here, right, they need your regulator to actually be able to rubber stamp this, because the banks don't just move, right? Because they are highly regulated, banks also need, government and the lawmakers to actually, say, okay, this is good. Bigger picture for me when it comes to all this, I don't want to go too far ahead, but I do feel like this is a platform that if it's done right, and if they take it out into the market properly, and especially continent-wide, this could be one of those things where, in the same way that the mobile phone and mobile payments were able to get a lot more African people just onto basic ability to send and receive money using mobile payments and M-Pesa, in the 2010s, etc. I really think this is one of those things that Africa or something developed in South Africa can actually contribute to how lending is done in the world. You can imagine that this is something that would work in other emerging markets, etc. Developed markets, maybe they'll take this on, but in emerging markets, a huge potential. So many people left out because economically, credit extension is one of the ways in which people are able to lift themselves, home loans, car loans. All of this stuff comes from having an element of credit. And most of the time, people start small. Think airtime lending. Right? You start small, you build a record, then you up to the next, up to the next, up to the next. So the big mission is, how do we get more people into the pool?
Well, thank you so much for that very, very interesting conversation, Mudiwa, really, really broadening our minds. And of course, this is something that we will be looking out for to really see how it translates into the broader lending landscape. That was Business Day's Mudiwa Gavaza.
Brought to you by Ayoko, Africa's leading integrated technology services company.